10-year note yields pushed lower again today, the second consecutive day we've seen marks lower after a string of moves higher, culminating earlier this week at a high of 283 yield. Today we're back below 270, so market's seeing a little bit of a reversal in yields. While we're seeing this reversal lower in yields, we are actually seeing the yield curve steepen. Recall just at the end of March into early April, we were talking about inversions, yield curves going inversions with 2-year note yields higher than 10-year note yields. So that's all flipped back to normal. We're now seeing a positively sloped yield curve, and we are continuing to see that move more positive as yields come off those highs from earlier this week. 10-year note yields again down for the second consecutive day after a string of moves higher. Now, what does this all mean for volatility? Well, if you check out that CVol index over at cmegroup.com, you will notice that as yields were moving higher earlier in the week and last week, we were watching volatility go higher. And as we reversed and now yields are moving lower, we are seeing volatility move lower as well. So back to that sort of that historical norm over the last year or so we watched and we reported, we're watching yields move lower. We are seeing volatility move lower with that. Lastly, what do we have the remainder of this holiday shortened week? We have the retail sales numbers that come out tomorrow, expecting a little bit of a rebound from last month's numbers. The claims numbers are in the moment look at the job market. Last week we saw new filings of less than 200,000. We are expected to see that as well. Likewise, we get the University of Michigan sentiment, last reported at 11-year lows. We are keep an eye on that one. Expectations are for it to hover right around that level as well, so not looking for a rebound in sentiment. We also get a handful of Fed speakers to end out the day. At this point, 10-year note yields have seen a big move higher. Treasury yields across the board have seen a big move higher as the Fed is expected to be raising rates more aggressively in 2022, but a little bit of a hiccup seeing yields pull back again for the second consecutive day.